All right, I'm going to open it up to the participants. So we've got our participants just joining our call right now. Looks like we've got 50 or so people just queued up there coming in, like they're all coming into the call. So we'll just give it a second. Okay, it's 12 o'clock. We're going to get started. And just want to remind everybody who's joined the call. First of all, thank you for joining the call today, and Michael and I and our trustees and partners here, and Scott, who works in our background to make things happen. We will remind you that this call is being recorded, and it'll also be provided via email in video link, as well as a PDF and a link back to the original portal where you did your transaction, where you can see all the history of all the calls and everything else. So with that, welcome, and I'll hand over to Michael to just open up things.
Yeah, thanks, Doug. Great to see you all, everyone, even though if it's just a little name and an icon, you can throw in the chat, hello, welcome. It's been a great quarter. It's been a bit of a boring quarter when it comes to real estate development. We're in that phase now, but in the hurry up and wait situation that is real estate development, we've got some updates, some progress that we can share, and let you know what we've been up to, and some of the things that have come out of it. We've made some great progress and hit some great milestones in terms of our 100 steps in order to getting from the beginning to an end of an added value like this. And so I'm really excited for that. Doug, as always, thank you for keeping the ship running. Doug is the one that is running all of the operational pieces and working with Scott here every day and Mary to make sure that all of the underlying things that we do, all of the traction that we're getting, all the value we're adding is actually making a difference. So thank you guys for making it happen.
I guess we should address where John is again. This is his second webinar where he's on the road, actually on our properties. So he was up in he's working. He's up in Picton dealing with the Wellington property, and then he went on to Montreal for another meeting. So he is not able to join us today. And Darren, one of our trustees, is in Amsterdam, riding a bike either in Amsterdam or Ireland and golfing. So we're lost then, but we do have everyone else. And thank you all joining. Nothing's really changed, as Michael said. It is kind of a bit of the lull in our process right now, and given our economic conditions, that's creating a bit more of a lull because people are not making as many moves in the moment as they wait for the anticipated rate to come down, interest rates to come down in June. And saying that, and I say nothing's changed, I mean in a positive way. Our partners are exactly the same. Our trustees are exactly the same. Our approach, we're not changing that. We're still moving along, and we still hold very truly to our original thesis that, you know, diversification in properties that have a lifestyle aspect as well as high economic demands and absorption in those communities, we're very attractive, especially for our land development process that we do, and the identification of, you know, quality parcels of land that have more than just one exit strategy that we can apply to it. So the diversification's worked well. Obviously, we sold Picton, and we've shared that with you in last fall and into January, and that was a good news story. Now, this meeting is also our AGM for the 2023 year. So I'm just going to remind everybody from a housekeeping perspective how it works. You know, you're our unit holders. You have ultimate say in the end of the day. However, you also have trustees that have been in place to speak on your behalf and to ensure that what Michael and I do, and John, what we do on an operator perspective from a general partners, is true to what we put out to you in our offering documentation. So when we go through these processes, it is going to be a very quick read through of our 2 or 3 items. I think 3 items that we have to disclose and also ask for approvals from. Now, we don't vote in this meeting, as we did in the previous one last year. We didn't vote then either, but we do give you the information, give you access information, and we've already, as trustees, signed off on the audited financials, which makes up a big part of what we report in this meeting. But in addition to the audited financials, we do approve of the auditors of the trust, which is BDO Canada. And we do approve for another year the trustees, myself, Chris Wickens, and Darren Denemy. So all of these things are assumed to be approved. And I need to open the meeting, which would be at 12:04. And I'll go through some of the information, and then we'll close the meeting off after we've presented some of the financials. And if you, as a unit holder, you feel like you want to dig in deeper, the financials that are audited ones are attached to the bottom of this presentation. So when you receive the video link, you'll see the video of today's meeting. But if you refer to the PowerPoint, or pardon me, the PDF version of the presentation that we upload, you can scroll through it and you can see the audited full set of financials. What I'm going to show you is just the abbreviated financials for both the audited year, and then I'll do a quick walkthrough on the activities of the 3 projects that are remaining. So with that, the meeting is now open for AGM. We will move into the abbreviated audited financials statements that are provided by BDO. And again, the statement here showing that they have audited. This is just a clip from the first page of the auditor's report to validate that they did the work. And here's our audited financials abbreviation. So we can see that the trustees have signed off. You can quickly see things like there's, originally we had $15.9 million of assets in the portfolio. All of a sudden it jumps to 18.8. That was the good news story. That includes the $2.8 million of profit and interest from the Picton sale. But that sale took place by the end of the year, and distributions took place into January. So people didn't see their, of course, funds get to them until January 1st, January 5th. So there is a carryover on those numbers. So there's not a lot of activity. Again, that's a good news story on this page. When it comes to day-to-day operations and cash flow, as we mentioned, and you'll see in our reports, as far as the updates on the properties individually, there's not a lot of activity. There's a lot of soft costs still. There's the management of things. There's the accounting and, dealing with the accountants and lawyers, the auditor, and also some soft costs on engineering and redesigns. We had to redo some redesigns. You'll see that with Wellington. So that as far as cash flows for the trust, nothing really changes. It's done at the LP level, and we'll cover that in the next screen. At the end of the day, we did distribute $7.7 million back to the unit holders. I think everybody's aware of that. I think we're already celebrated. That's enough, but it was done. So that's in our previous year, and we look forward hopefully to doing the same this year before we get to the end of the year. So once again, these are independent auditors reports. That is really the end of our AGM. So if there is any concern of the material that you're either going to see today, or you want to review on your own, you can do a write-in to us, and we'll take that into consideration. If there's something that seems completely out of line and you want us to, review the approval of these audited financials and the approval of BDO, certainly write it in. If there's no concerns, then everything just goes into the record and we move on. So we will close off the meeting officially on the AGM side at 12:08, and I'll move over to just, again, very quick report on the financials. And I'm not going to focus in on too many of the numbers because nothing much has changed. You can see we include the cash flow statements from January till April. So from January till now, we include the December 31st balance sheet, show you where we left off at the end of December. And just as a financial reminder, we use a balance sheet because it's an asset that we're adding value to. We don't have an income statement until we sell. So the income statement for Picton, for example, only lasted for about 2 months. The income came in and then was distributed, and that income statement basically went from 0 up to the $7.7 million and then back down to 0 as we did distributions. So we're always looking at the balance sheet. We're looking at the cumulative value of what the property in Wellington, we've got $2.619 million into it, and $2.5 million of that comes from the Class A unit holders from the trust yourselves. So again, not a lot going on there. There's a few little things that have happened in soft costs in there. Port Colborne's very similar. We have a lot of cash in the GIC, as you can see on the screen. We've got $1.2 million of cash, and Port Colborne has that whole area had a nickel plant. So there's the first, I think John's not here to answer this. He'll probably tell me more accurately. I think it's the first 6 inches to 8 inches of topsoil. When it comes off, it has to be remediated. So we over raised here and hold that money into a GIC, which is yielding us about 5.25, 5.35% right now, just in case we had to do some remediation before the sale of the property. It doesn't look that way. We'll talk about it in the update, but that's, you know, you see a big number like that kind of pops out. And again, if you look at the cash flow, it's really just been soft costs, and then a couple site studies, and not too much in as far as costing any real money in this past year to keep moving forward. Oops, did I skip over Cambridge? My apologies. I kind of skipped over Cambridge there. Cambridge, we do hold a little bit of reserve there. And as you will recall, and you'll see in the update, we'll remind that we did acquire the adjacent properties. We had an exit out of the property, and I'll discuss that in our update, the rear of the property. Even with the $300,000 of reserve we don't anticipate too many more costs. We had our final public meeting, and we'll talk more about that in the property update. So once again, you know, it's about the same, if you want to call it a burn rate. You know, we're spending about $40,000 per project just to keep moving some studies and some meetings, and you know, planners have to do the presentations at the public meetings, and we did have that one about less than a month ago. I attended that one. So that's the abbreviated financials there. You can again reference these by way of watching the video again, or by way of going to by email on the PDF that gets posted onto the portal. So I don't know, Michael, sorry, I kind of whipped through that. Any comments on the financials? I don't think there's really anything to say.
No, I think you covered all the high points. All the high points for the financial statements, which are never really that fun.
No, not that exciting. So a quick reminder, you know, we selected our properties. We kind of go back to this. I like this slide, and I like the diversification reminder, because we're in a time in the last 4 years where we've seen so much volatility, and every generation can say it. I've been in the financial industry, you know, just over 30 years now, and every 10 years there's some major volatility caused by something. And this last 4 years is no different. So we've had all kinds of volatility, but I still think when we looked at our properties, and the orange ones are kind of the markets that we really zoned in on. And I think we picked some really good markets, and we'll share some of the you know, thoughts that we're having for our Red Trust 2 as well. Going into our timeline, our Gantt chart here, we've updated this. You know, as time moves on, we keep reminding everybody for their reference, like when we bought and closed in these properties back in the end of 2021 and got going on 2022. Wellington at the top here, we have a draft plan endorsement and approval from the municipality. We just don't have full servicing quite yet. There is some movement with that, with the municipality as they build out their new system, the new sewer and water system that's going to be expanded. So we will have that. It is technically, you know, for sale right now. We do softly shop the market around, but we're also pricing that property to see if it fits into our Red Trust 2, and we'll talk about that in a second, or a minute or so. And so by the end of the year, we would like to have this property transacted in one way or another. We know we're at that point where we can do that. And very similar with Cambridge, I'll talk about in the update. Our submissions are done. Everything's in the municipality's hands. I attended the last public meeting where we expected to have kind of a NIMBY approach from the 8 neighbors who would be shadowed out by these new buildings there, and you'll see some pictures. I honestly was very, very happy with the meeting. Everybody was very respectful, and our planners were very professional. So that meeting now yielded very little in resistance from the 8 homeowners. It was actually more about them saying, what are you going to do to help after you build this building? You know, make sure I don't have any soil erosion behind my property, things like that, which is a really good indication that that we're not going to have too much friction on May 28th when it goes to final vote. So that one as well, final vote gives us approval. If it gives us approval, then, you know, we're going to work hard to go back to all of our leads that we've talked to this building about and see if we can't get that thing transacted as well before the end of the year. Port Colborne, very similar story. Everything's in the municipality right now. So our target dates have been met. Everything's been submitted. There's they actually passed their date. They have to return to us, financially return fees to us because they pushed it past their 90-day period. But it's gone past the 90-day period because they're also negotiating with us for our stormwater management. And I'll show you that in a picture when we do the updates there. And of course, Picton, of course, is done and sold. So really all three properties are on the same timeline right now where they've all been submitted. We expect approvals to be coming in for all three of them. Well, yeah, again, Wellington is 99% approved with the exception of servicing. And then once those approvals are in, we go to the market and we see what what the market's going to bear. We hope that we see a 1/4 point interest rate drop in June to give the market a little bit of spark to get people back, on track to purchasing and developing our building properties. But again, we can talk about our aspirations with specifically Wellington with our Red Trust 2 in a few moments. Michael, any comments on the timeline? We're going to go into the project updates. We might be able to tie it into there.
I think I'll save them for the project updates. I think this is just a good one pager to represent where we're at. And when things get delayed, because this is development, it's always a moving target. So I think I love that screen, but I might have some comments as we get into them.
Sure. Okay, so here we are at our projects. And again, we will take questions in the chat. We'll watch the chat and get the questions at the end of this. And so bear with me as I keep going through and some of John's materials. And this particular picture we use, I believe we used the same one last time. It just really shows what Wellington is turning into. They're talking about the town going from 1,800 to 18,000, over the next 10 years. That's their projection. So you can see the urban boundaries have been fully expanded. You can see our little property here in the green and the servicing that they're currently building out to maximize and to accommodate this Caitlin property that's up here that's targeted to have some high net worth homes up in this area, comes right beside our property, has to go right past us. And that's really why we can't get full servicing at the moment, because they're still building that system to go up through there. And I believe something comes down this trail as well. So that's a growth story there. Of course, we put our footprint in there, and then we put in our 3D renderings to give us a feel for it. They informed us, I guess it's public knowledge now, but they informed us that this municipal facility is being taken out and there's going to be a new building put in there. So that's been a go forward for the municipality. However, there was some issues, and I don't know the technical reasons. I'm not on day-to-day with the planners, that they wanted this building here pushed forward, and our planners and our engineers and architects made a decision to actually just turn the building sideways and accommodate it and maximize the property better. I don't feel that's a huge material change to anything that we've done. It doesn't change the approval process. They've already said we can have 96 units. They've already said they'll connect our servicing when it's built. It's just simply changing the layout. And to be fair, whether somebody else builds it or we took it forward to build it, you can change the layout after it's approved, just a red line usually. So I didn't do a very good job here of getting a proper rendering. I just cut.
I love your Photoshop skills there, Doug. The screenshot
Yes.
and rotate.
Yep, that's exactly what it was. So yeah, that was a pretty easy one. So as I mentioned, like we are looking at Wellington, as a potential modeling on what we're doing with our Red Trust 2. And the reason I mention that is that it's just an attractive market. So we're as excited about the idea somebody coming along and giving us the price that we want for this project. And we know that it's got some good legs under it for somebody to build out, which then of course created the conversation of why don't we just build it out ourselves? And that created that conversation. That's how excited about this property we are, and especially the area, as I said, it's just crazy the amount of population growth that they're expecting there and they've planned I think it's John told me it was $280 million for servicing from Picton to Wellington that they budgeted for, and that municipality is not very big. I would suspect if like Toronto or Guelph or Waterloo or Calgary announced a $280 million project, that's substantial. So that's the kind of growth that's going on in Prince Edward County.
Doug, go back. Can you go back to the red urban boundary slide? The thing I love about this project is look at where we're at. We're that green star in this huge urban boundary. And I think anybody on here can think of a city where, you've kind of, you've got this, imagine this whole city, this whole red was built up. And if you owned a property, not on the edge, but more of in the middle of that city, the value of that property compared to the rest of the properties, as you get near the city center, things tend to have more value, and near the edge, they tend to be at more of a discount, you could say, overall with the average of that city. So we're buying here at a discount at the edge of the current developed city, but with the urban boundary being so big and the infrastructure that Doug talked about in the cities, the municipalities' plans to expand, we're in such a good spot that as the development of the city expands, and this is over 10, maybe 15 years, but as it expands, this location is perfectly positioned to not only be protected from value, but also have the best opportunity to increase in value. And that's what I love about this, is its location in terms of the urban boundary, versus if this property was right at the edge of the urban boundary, there would be less, potential for the value to increase. Now, we're not 10-year or 15-year investors here as partners in this trust, but anyone who buys this property is going to be thinking about 5 or 10 or 15 years. So we're nicely positioned to sell to the investor that that is now their play, is to take 5 or 10 or 15 years. And so I really like where this is positioned on this map. And I wanted to point that out.
Yeah, so I see some questions coming, Wellington. We'll come back to those questions at the end. I'm just going to point out, just kind of reiterate, I guess, in Wellington with the amount of growth. So right now, these are numbers that we're getting from a couple of real estate agent contacts we have. You're getting about $500,000 to $550,000 for a 1 or 1.5 or 2 bedroom townhouse, stacked townhouse wise. When we looked at it, we thought, small community would probably closer to the 450, and we kind of stuck with the 450, 500, thinking that was about right, and given the interest rate hikes. But this was just the last couple of days where a realtor said no, these will definitely sell in the 500 to 510, 520 range. So it shows again, like position, as Michael said, whoever buys this or builds it's going to have some good increase in value as this next phase, to the north of it, it's all developed out. So we can move on, I think, to let's go back to Cambridge. So I mentioned that I was at the last public meeting. I was with our planners, our planning team, primarily John's team. 3 of them were there: our lead planner and our architect and our urban planner. So the 3 of them did the presentation. They did a knock-up job. It was very well done. We had about I'd say about 30 people show up, and primarily the people who own property behind us, who have a lot of concerns again about getting blocked out, the sun being blocked. Typical, I don't mean to demean it, but typical, not my backyard kind of original complaints and things. And we did this public meeting at the request of the municipality, and there was a few points that really came out of this. And one of them was that we originally had a 3-tower building. So these end towers would be a little bit shorter, and this middle tower would be a little bit taller. And the feedback was that, hey, if you only had 2 towers, you wouldn't be blocking as many views, and you'd get a crisscross view. We're like, oh, okay. So basically the group, even though they were there to say, hey, we don't like the idea of you building behind us, they really actually provided us with the solutions that we needed to come back and present to the actual public. And that was really encouraging. So, what we have now, if you're looking at the property from the rear, would be somebody's backyard over here. This actually represents the access, and the reason we bought the property that's adjacent and behind us to be emergency access out from the back of the building out to that neighborhood. So never being used, by the way. This is a artist rendering. There would never be access. It wouldn't be like a public walkway. It would be closed off so that it's only for emergency use. So those new renderings really show that. This here just gives you a reminder. This is our boundary between our property here, the house we purchased up here at 66 Hyman, and what LJM is already approved. So LJM has already been approved for their 991. Let me go back here. 991 units. I believe I have that correct. Let me go back. Yeah, it's right here. It's 900. Oops, can't get that. It says 991. So 991 units approved in this property here, and then this is the proposed building now here as it would be. And just to give an idea, like there's, like I said, 2 or 3 points that came out of that meeting. One was that our neighbors weren't as resistant as what I thought. I thought we were going to get more, demands for the municipality to stop us from building. We also have a heritage home on the site, which we've agreed to retain. the facade in the front, so anybody who builds this would retain that front, and turn the back of it into some kind of common space, like whether it be a community center or a library, maybe a medical office or something like that. That's two of the things that we accommodated, which was the, trying to build a better building for people to have better line of sight through it, and of course, keeping this heritage space. And then in the end, we also had one of the counselors, I'm not going to mention the name, was in the room. 2 or 3 counselors were at this public meeting. They weren't there as counselors, they were there as people, as representatives. They weren't there officially to be at the front of the room. But one of them literally just said in the middle of the meeting, hey, remember everybody, this project's going to get approved. It's going to get voted in. It's going to get approved, because if we don't approve it, these guys will have, a trip over to the tribunal, the Ontario Land Tribunal, and they will win there, and then we will just cost us a bunch of money. So this is definitely going to get voted in. And I thought, well, thank you, Mr. Counselor. As I sat there, I'm like, thank you for giving me that nod. So I don't want to take that as 100% guaranteed by any stretch, but I certainly took that as a very positive, that we didn't have the resistance within the council or the neighbors, and that what we were doing was being, taking the high road and saying, yeah, we're here, come and ask us questions, give us your feedback. And in the very end, people were looking for things like these. You see all these little, I don't know, we call them like aesthetically blocking views, like these little things in the back, they'd be on the back of the property as well. And that's actually to knock down the reflection from the light from the windows. So that was a request that said, can you put something so we don't get a massive amount of reflection here? And then, there was a question, there was things like, can you put more trees on the property line after you dig it all up and stuff? Could you place trees on my property so I have more trees to block the view? And that's not a big cost. Those are all little costs, and the design thing was already built in. We already dealt with that. So that was really I don't know, somebody has questions, I can try and recall maybe if there's any more answers, but we'll come back to that. Oh, sorry, any comments, Michael, on Cambridge?
Yeah, I do. If you could go back. So first of all, Doug, thank you for getting in front of the firing squad. I don't know if anyone here has ever been to a meeting where you're the developer and you have a group of homeowners that are right beside your 15-story building. And you walk into a meeting and you've got to talk to this group. It's intimidating. It is not comfortable, and you feel like you need a bodyguard sometimes. So Doug, thank you for going. That is not a comfortable place to be in, and I'm really glad to hear that it was super amicable, because it doesn't always turn out like that, and the developers usually don't show up like we did. So the fact that Doug said, I even asked him, I said, should we even go? Just send our planners, and Doug's like, no, I'm going to show up. I'm going to be there. I'm going to see this thing through. So thank you for showing up and doing that. That is not easy to do, and I'm glad to hear that it turned out really well. So that's number one.
So was I.
That's like, you feel like you need a bodyguard when you go into some of those, and you want to walk to your car at the end of the night. You want someone to walk you to your car. Okay, so number 2 is I love the adjustments that we made based on the feedback from the community. The council meetings were great. I loved, directly listening to the feedback, and they're available on YouTube. If anyone wants to go to the city of Cambridge and see how this progresses, you can go and watch the YouTube videos of our team going and presenting in front of council and representing us as a group of investors. The team that sticks up for us, and it drives our collective agenda forward, and they do a fantastic job. Our planning team is really good. So you can go in the city of Cambridge. I don't know the exact date, but you'd have to scroll through. I was just looking at it while you were chatting, Doug, to see if I can find it. But do you remember the date of the meeting? If anyone's interested, some of you like to follow up. You'll find it, City of Cambridge there. What I will say is Scott Hamilton is the counselor that is completely on our pro-development. I wouldn't say on our side, but he's just on the side of progression and change. And like you said, Doug, I really like what Scott Hamilton said. He's like, look, if we want Cambridge to be a first-class city, there's a group of investors is coming in, and they're believing in us, and they're putting their effort, and they're putting their money here. And so how can we treat them in a way where we are asking them to make all these concessions when they've come to us to make our city better? And I just loved the way that he positioned that. And I feel like that's what we're doing as investors. We're adding value. Our value and mission is to help solve this housing crisis. And that one counselor really got it. So anyone who's, if you ever bump into him or you're ever in a situation, if you're ever near this area in Cambridge, just want to highlight that name, Scott Hamilton, who really understands the mission that we're driving in terms of creating units. And
Yeah,
the last,
after I read his material, I think I said that's the next mayor of Cambridge, Ontario.
yeah, so that's what you brought to our next meeting. Like
Yeah.
that guy knows how to make it happen. So he was great. And then the last thing I'll say is our decision is on May 28th. And so on May 28th is the next council meeting. You can watch it online, and they're going to decide if we're approved here for our zoning, or if we have to go back to the drawing board. Now, the interesting thing, and like what Doug said, is the process is that if it's not approved, we go to the OLT, the Ontario Land Tribunal, for an appeal, and we have a high probability of winning our appeal because Nextdoor just got approved for something that is much less aggressive than us. So we're poised good to win our appeal. We're not worried about that, but the only thing that we're making these concessions is because of time. We're always aware of the time that the money is in play for all of you. And so that's why we're spending the effort and the time to meet with the city to get these towers up so that we can move forward on May 28th, and we don't have to spend another 4 to 6 months going through an appeal process, which we'll get to the end result, but we're going to be another 4 to 6 months in market. So just to give everyone a context of how the work we're doing and the strategic decisions we're making for everybody on this call as your partners. And so that's on May 28th. We're going to find out if we did it, and if we did, great. And if we didn't, we're still good. We're just going to go to we'll just go to tribunal and make the adjustments that they want. So I wanted to just kind of give the process, Doug, and everyone that's here that maybe hasn't been through this. I don't know what time the council meeting. Usually like 7 p.m. In the evening.
Yeah.
It'll be on the website though. Yeah.
Okay. All right, thank you, Michael. That takes us to Port Colborne. Again, like I said in the financials, there's not a lot of activity. I mean, there's a lot of moving parts that we deal with on a weekly basis, monthly basis, but from the outsider view, it's not a lot of progress. It's not like we're moving dirt or anything on the site. We're still waiting for the final decision of the municipality. They have gone past their deadline, as I've mentioned, and they are basically using the negotiation of this space here, this yellow line of where our stormwater management, our swim pond would go. And they want us to purchase it, and then we would gift it back to them. And we're just really haggling about the price. To be very honest, we didn't like the feeling of getting bullied. So we're like, well, we feel like it's more advantage to them than us. And we have a little bit of time because we're not the one on the time clock. They are, and they have to pay us back our fees if they don't move forward and resolve this with us. And secondly, interest rates were sitting high, and we thought we're going to hold this property. Again, I'm speaking more personally, we're going to hold this property anyway for a few more months. Whether they made a quick decision, why pay them, we kind of ran some money to the municipality because they want us to purchase this outright and then turn around and give it back to them. But in saying that, like we've made the progress. Oops, I think I skipped my own slide there. We've made the progress on here. Oh, maybe I will be able to do it here. On the site, we've obviously shared our videos and our renderings, and we do feel this is another site that we've looked closely at with the amount of multiplexing that can be done on this site. Another thing that we had to resolve was the connections of servicing from the existing subdivision over here through this area here, and there was just a bit of land that was in between, and that's all resolved. We've got that all in place. So there's really nothing standing in our way from an approval. Zero resistance from our municipality as far as neighbors and councilors and planners. Like everybody's endorsed it. Everybody seems to be on board. It's just simply negotiating that swim pond now and then getting a council vote on that. So that's about all I have for Port Colborne. I mean, there's lots of good information about Port Colborne. The area, Niagara is still very strong in the area for our real estate market as well, despite interest rates. Oh, we do have a real estate agent who actually is interested in it. Had somebody looking at Port Colborne, so she did contact us. So there has been some interest in, even though it's never been listed or anything. There is some activity. Some agents are out there digging up, opportunities for builders and developers. That's a good indication that the that some builders and developers are starting to put some more, I guess, some more work into building their pipeline and getting ready for what is anticipated to be, you know, the next round of real estate growth once interest rates start to decline. So after that, it's just Picton. Obviously, we sold Picton. You know, that's what we thought it might look like. Now that it's sold, who knows? Somebody might redline it and make it different, but that was the end property. And again, I think we've celebrated that thoroughly. That takes me to the end slide here, where we've mentioned and we thought we're not trying to solicit everybody, just to be clear. We just want to inform everybody that you know, our Red Trust 2 is coming. We've been, I think, as Michael said, we want to take a methodical approach in everything we're doing, not just you know, run too fast. And given the market we have right now, we have slowed it down a bit over the last year about going on to the next set of projects. We have looked again, as I mentioned, about, you know, taking Wellington, and this is the question that popped up on our chat. If we were to build out Wellington and using the Red Trust 2, we would simply transact the property at a fair value, have our trustees establish that the market value is being paid for it, and then transfer the project over to Red Trust 2, and then do a new timeline on construction and sale of the property to do that. But it's just an exciting property to look at, and it's an exciting one for us to focus on. We are looking at you know, a multi-pronged approach with Red Trust 2, with having some infill plexing where we just simply take a vacant lot and put a fourplex on it. You make a decent return on those, and we still are looking for land. Land comes to us pretty regularly. Certainly, it's not at the prices that it was at the peak of COVID. People have started bringing their prices down because land is definitely you know, stopped being transacted about 2 years ago at the peak of the kind of COVID race. And now with the interest rates where they are and available cash, we're looking to only move forward on a piece of land that is, I always be careful with this word. I hate getting recorded, but it's distressed. You know, if somebody's not quite there and they can't make it work and they got to dump their property because they can't afford to, you know, keep on going with the project. That's what we're looking for. We believe there's going to be a few of those that are going to come to us, hopefully over the next 6 months to a year, where we can, you know, give those a strong consideration. So those who are interested on the Red Trust 2, you've already been given, I think Mary sent out messages to everybody. And then you will also have, you know, the ability to get your accounts at Front Funder up to date, which is built into a link here on the bottom of the slide. So keep that in mind. I would like to be able to tell you a definitive exact date that we're going to start to, you know, to raise, but I'd hesitate to do that. I think we're probably still in about 60 days out before we start to raise, because we have to figure out our property acquisition pipeline first. So that really just takes us to our Q&A slide. In our next meetings, I guess I should highlight that, September 10th, December 10th, and May 14th. So we have a break for the summer. If something does come up in, you know, the next few months, you know, property acquisition, or sorry, not property acquisition, pardon me. If one of our properties is has an offer on it, or approvals, we will certainly send that out. If there's something material large, you know, that we need to talk about with everybody, we will send out a webinar invitation. But right now we see September 10th as our next webinar, December 10th. Previously, we've been trying to do the first week of January, and that's become problematic from a holiday schedule and just in scheduling. So I've moved it arbitrarily to the 10th of December. So we do it just before Christmas. And then our next AGM would be roughly a year from now on May the 14th. So with that, let's turn to some more questions. Michael, or maybe some comments if you have some.
No, I think that was great. I think the questions, we can answer the questions, but you did a great job. Thank you. Let's see.
You want to grab a question there?
Let's scroll back up here. I think we had a couple. Looks like you're all enjoying this meeting and how we run it. So thank you for the feedback. We do this for you. So we want to make sure if this is too much information, not enough information, but it looks like it's so far it's the right amount. So we'll keep going. Richard asks, if you were to keep Wellington to build it, how would you pay off that property to phase one investment?
Yeah, so let's just get the context there. Would it be the Red Trust? Let's call it Red Trust 1 is Red Trust, and then Red Trust 2 would be the trust that we would move the property due for construction. So in order for us to establish the purchase price from Red Trust for the property, we would have to put it out to the market. Also, everybody who's a unit holder has first right of refusal. So if you want to purchase it, you can purchase it ahead of us. And then the Red Trust 2 would make an offer to Red Trust to purchase the property across. So at that point, everybody who's in the Red Trust would get their funds back. They would have an option to do a lateral. They'd be able to invest straight across into Red Trust 2 with that money. But in real physical terms, you're going to get your money back, and then you would have to choose to come into the investment on the new timeline and new terms under Red Trust 2. How are older contacted properties are sold for distributions, given that we only have 2 more webinars? Yeah, so just keep watching those, David. Keep watching those emails. Those emails come out on the same distribution currently, and for the most part, I hesitate. Mary might have to confirm. I think they come out from the generic hub, like our distribution, and then Mary's emails are connected to that, so that if there's any questions, you can always email Mary, and she's usually there to really answer those. But those emails that are coming from our automated system that tell you about these webinars, and those will keep coming. If we have any movement in any month that we feel we should send something out, we'll send those out. If there's distributions, you're going to get multiple emails. You're going to get told about the acquisition. You're going to get told about the sale of the property. You're going to get told about the profitability, and you're going to get told about when the distribution is, and then you're going to get told when that money's going to actually hit bank accounts. Typically, as we've done with the trust, if something sells right now and we're in May, it would take us till the end of the quarter to even clear off the financials. And even if we close the property today, it wouldn't be until the first week of July, the first week of the next quarter, where we would do an actual physical distribution. So I hope that helps when you're thinking about the timing on that. So we're always, whether in the first month of the quarter or closer to the last month of the quarter, it's always going to be the next quarter when we can actually do a physical distribution. I think I just talked right around that question, but Red Trust should provide a roll distribution. We would love to have a rolling distribution in Red Trust too. That's consistently quarterly, going out. It's just tough with the real estate market and the timing and the availability of financing to be able to finance the project with cheaper money. 10 years ago, 15 years ago, cheaper money was readily available. It's not so much now. So we do have to really do our head scratching and make sure that we're really sharpening our pencil when we're doing that. So the intention is always to try and design something that we can do some quarterly distributions. But we also don't want to return capital that could be used, to keep a project moving forward on there. So the 5-year comment. So which one?
Yeah, I think the part of the question, Doug, is also around not quarterly necessarily, but rolling distribution. So as if we have 10 properties, so we sell each property, we distribute the funds. We don't hang on to it. There's no advantage to us or you to keep the funds. We want to return them as soon as possible so that your return is the highest. That is what we're trying to do for all of you. So we'll likely make those decisions in the case to get you the money back as quickly as possible.
Yes. I'm sorry. I think I must have put quarterly in my head there when I read that. So yes, I mean, the intention is always to do the shortest duration as we can and get capital back in the hands of our, and it goes back to why we look at having multiple projects into one trust so we can have that diversification. And if we buy one property, in this summer, and then we buy another property in the fall, and we buy another property in the first quarter of 2025, then we have a staggered exit. We should be able to have those rolling distributions.
Demand and says, if we want to invest in Red Trust 2, I would like to use the Trust 1 distribution. How's the timing on that? And is Michael still involved?
Yeah, so I think right now we don't have any offers on Cambridge or Wellington or Port Colborne on the table. If Red Trust 2 was to approve Wellington to go forward and make an offer on that, it absolutely would be done. I would think before the end of the summer it'd be in place, and it wouldn't necessarily help this particular question scenario because you would be getting money back in your Red Trust, and you have the opportunity to put it into Red Trust 2. And there, as I said, you might have a lateral ability that we can go directly across, but it wouldn't that timing wouldn't really help the scenario, I don't think. I'm not sure if I'm answering that question. I don't have anything that's gonna line up at the moment. If we knew we had Cambridge, so as an example, if Cambridge was gonna close in September, you would get your money back in September, and then we would just be we'd be in the heat of our raise in, I think in August, September, at any stretch at this moment. So.
Yeah, and in addition to that, Doug, the thing to consider too is in Red Trust too. So for Wellington, if we were to build out Wellington, we're going through all the pro forma, we're building all of the tenders we're building a tender for and getting them from all the construction companies. If we were to go forward and build out that 96 unit project, that would have to be in a different trust, a different entity, because the Red Trust 1 investors, that's not what they signed up for. They didn't sign up for this longer term build. That's not the exit strategy that we talked about as a core exit strategy. So the exit strategy would be to sell to somebody who's building. If that's us, then we would just also be doing the building. So as an investor, you could just, get paid out from one and move into the other, but there has to be a transaction, because we can't just hold on for another 5 years, because Red Trust 1 investors that don't want to maybe stay that long, we owe a duty to them to make the best decision in the best amount of timelines. So that's how it would work if the numbers work out for us.
Yeah, that's a good point. It kind of comes into, I guess there's a couple questions here. Yeah, so the structure, Michael Michael and I and John are Red Trust. So Red Trust 1 and Red Trust 2 remains under the control of our GP and our Red administration group, and our administration corp doesn't change either, which then does all the management agreements with the management team and the same structure. So you get the same team managing the second trust. The other question in there is chosen to. So answering the question from Eve there and Miro, we looked at assets for the last year and a half, and I use the word distress, and I always caution myself from using that because I don't want to demean anybody's other opportunities, but there's a lot of projects that just are not going to move forward. And I feel like that was fairly predictable in the last year because of interest rates going up. So Michael's point is really the reason that we have to give different consideration for doing construction versus doing just the land development. And that's a timeline. Like as Michael said, we made a commitment to our Red Trust 1 investors that we're going to exit as fast as we can. And we were going to cap our purchases when we couldn't find value in other properties, which we did. We could have bought 6, 7, 8 properties, but no, we said, no, we can't find value anymore. Let's just cap. And right now we're starting to see the signs of recovery and the signs of value in the construction of multiplex, and the density being 96 units or even 30 some units with property in London we're looking at. We can see making the returns. They are not as high as some of the returns we've seen in the past on land development, in particular. And COVID, I know people don't like when we reference COVID too many times, but it's been a great reset for everything. Everybody understands that it's been a reset. We're not going to see those same returns. We're not going to be able to promise that the 50% return that we could do gross on a land development deal into the future, not in the near future. So we're looking at 12 to 18% maximum returns. Really seeing like the 12% being the competitive return that we need to hit. And we're looking at things with structure with hurdle rates that are at like 8%, so that we know that our unit holders get their 8% first, which covers off the risk they took to go with us. And if we can, get the timelines to the shortest distances possible, and we can keep the project on, and we've got good partners and good purchasing power, we can come in the 12 to 18 and we'd be very happy with that. So.
Yeah, I agree. I have nothing to add. Management team, in terms of management team structure, if we were to launch Red Trust 2, we're coming with the same management team. So that's who we're doing the numbers with John and Doug and I as the general partners, and the same team led by Scott and the trustees. So yeah, we're just like even Miro, like Doug said, we're running the returns. We're trying to see how we can maximize the scale that we bring, and the patient money, as it's called in the business. The beauty with what we're doing as a group together, us and you, is our debt service is non-existent. So, you know, we're not paying 7, 8, 9 to 10% interest rates every single month. And so that's what allows us to be able to do these things. And the good deals are harder to find now because of the people are holding on to properties is really what's happening. I'm sure all of you are experiencing that when it comes to just buying your single family income property as well. Unless you have to sell, as if you're distressed, like Doug said, unless you have to sell, you generally hang on to your property in this market and wait for things to get better. So we're doing our numbers based on the worst case scenario, which is this market. So if the market does better in 2-3 years, then we do better. But we don't want to, and I know I don't want to plan a model where we're hoping the market's going to be better. So we're like, here's the returns that can be produced, and they're just not as high as they were 3 or 4 years ago. And so that's what we're modeling out right now to see realistically what is it that we could get for you as our investors.
Yeah, like, I don't think I can confidently say that our confidence in the real estate market hasn't shaken. We're just now having to fine tune numbers to make sure that we're going to head in the right direction. And I know I've said it way too many times, but we really are waiting for that signal, which would be the the 1/4 point drop in June. If they can see the way to do that, that would send a pretty strong message to the institutional world as well, the commercial buyers, that they can now reset their performance and say, okay, at least we know where we stand with interest rates.
Yeah.
So it's a hunt right now. Look for good value. Make sure we keep our unit holders happy with what you're seeing and hearing from us today, and hopefully you follow us along to our next project and spread the word. When we get going on the next one, it's going to be another fun ride.
Yeah. The other thing I'll add too, Doug, is in terms of what we're doing. When you think about what we do as a general partnership, our work is like a 7-year time span. So, you know, we're already working on Red Trust too, but we bring investors in. We want to have your money in play as short as possible so we can return your money back and get you the best return. So we take all the risk in this period in terms of the work and the investment and all the things that we're doing. And then we'll bring you in when we're ready. So we could very easily just open the portal and raise $10 million in the next couple of weeks. I'm pretty confident of that, but we want to make sure that we're ready. We got our model ready, and we bring you in the right timing. And so if you think that we're waiting, and you know, I know I've read some feedback, Doug. It's like, guys, hurry up! Like, when can we invest? When can we invest?
Yeah.
Well, we're doing the pre-work right now, and we're bringing you in at the strategic point to get you to maximize your returns. That's really what we want to do. We don't want to bring you in too soon or too late. It's a really delicate planning and project management in terms of when we bring you in. So if you want to be patient with us, know that we are working hard in the back end. This is what we do before you ever come see one of our deals or come in. And then once you're there, we want to be ready for you.
And I think with that, Michael, we got 12:52. So I think we've got through most of our questions. Thank you everybody for joining us today. Thank you, Michael, for helping get this information out there and keeping everybody informed. And I look forward to sending our next update out. Hopefully that includes the sale of another property. That'd be nice to send the email. And if nothing else, we will see everybody on September 10th, our next webinar. Thank you so much, guys.
Thanks, everyone.
Take care.
Good to see you all. Bye.
Bye now.